Is Altria, ticker symbol MO, a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Altria using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Altria is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Altria stock to your portfolio. Right now, Altria stock trades for $46.05 per share. In its last day of trading, it's up 0.04%. Since July of 2023, Altria stock is almost exactly flat. This is behind the S&P 500, which is up more than 20%. In the last decade, Altria stock is only up 9.4%. They're compounding at less than 1% annually, even though they were beating the market until the beginning of 2019. In the last 16 years since Altria spun off Philip Morris, the company has compounded at 5.1% annually. Their stock beat the market by a wide margin until 2017. Things crossed over in 2019 and they've been down since. Thankfully, these returns aren't all for shareholders. Altria is also a dividend king that right now pays a huge market-beating 8.5% dividend yield. When these dividends are added back to their stock gains, Altria has beat the market in the past 16 years. Today, at the time of recording, Altria trades just $1 below its 52-week high. This is up $7 from their 52-week low. And how big is Altria? Today, they have a $79 billion market cap. Starting with our first metric, we want Altria's average returns on capital to be greater than 14%. Returns on capital tells us how much value the company creates. You can think about it like your form when you're lifting weights. You want great form before you're adding on more weight through growth. The same applies to businesses. For Altria, they've earned above average returns in all 5 of these years, and they've been getting even better. The issue the company has is how much capital they can deploy in their business. In 2019, they earned 27% returns on capital, and this increased to nearly 48% in both 2022 and 2023. When we take an average, Altria brings in 39% returns on capital in a given year. That's more than 5 times better than a standard business, and this is a massive check on our first metric. Now, what does Altria really do? Altria comprises Philip Morris USA, U.S. Smokeless Tobacco, John Middleton, Horizon Innovations, and Helix Innovations. Through its tobacco subsidiaries, Altria maintains the leading position in cigarettes and smokeless tobacco in the United States. It also holds the number 2 spot in machine-made cigars. The company's Marlboro brand is the leading cigarette brand in the U.S. with 42% market share as of the end of 2023. Beyond its core business, Altria holds an 8% interest in the world's largest brewer, Anheuser-Busch InBev. It also holds a 42% stake in cannabis manufacturer Cronos. Altria acquired Enjoy Holdings in 2023, and it operates a joint venture with Japan Tobacco in the heated tobacco category. Recently, Altria disposed of its failed investment in Juul Labs. That was a major destroyer of value for company shareholders, and it's something we'll cover more later in the video. Now we know how the company earns high returns, so next we want growth in their sales, earnings, and free cash flows. Growth in a business simply means more. For Altria, because of their high returns and the company's durability, this is going to be especially key. In the last 5 years, Altria has increased their sales by 3% from 2019 until today. The company's earnings were negative in 2019, which we'll look at, and they're positive today. And most importantly, they've grown their free cash flows by 18%. This is great as the company's getting more out of their fixed assets, and they're really making these cash flow gains through their pricing power. Now, the company's earnings were negative in 2019 due to an $8.6 billion loss on the sale of investment. This relates to Altria's $12.8 billion 35% stake in Juul Labs, which it made at the end of 2018. And at the end of 2022, it was reported that Juul was only worth 5% of Altria's original investment. Overall, Juul burned $13 billion of the company's money, yet their core business remains intact, even though cigarette sales are declining in the US. As we see in their numbers, the company's still grown despite this, and it's another check on metric number 2. Right now, Altria is owned by 3 super investors, and this is led by Torrey Funds, who has just a very small 0.44% holding in the company. Thomas Russo, a Buffett follower, also has a very small position and added to it in the most recent quarter. The Torrey Funds holding was bigger, but they trimmed in the first quarter of 2024. Next, in our third metric, we want to look at Altria from the view of an individual shareholder. Here we want to see earnings per share growth. Altria had negative earnings in 2019 due to their write-down, and they've increased since then. At the same time, the company's bought back 5.5% of their shares. With fewer shares outstanding and greater earnings, Altria has grown their earnings per share, and it's another check on metric number 3. Altria is perfect so far. Metric number 4 is similar but even more important. Here we want free cash flow per share growth. Free cash flows are the lifeblood of any business, and in this time, Altria has grown theirs by 18%. Coupled with these share buybacks, again, they've grown their free cash flows per share, and they're still perfect through 4 metrics. It's another check. Before we look at the company's balance sheet, why don't we cover our first bonus and look at Altria's dividends? Altria is a dividend king that right now pays a huge market-beating 8.5% dividend yield. But is this safe? That's what we're figuring out through our bonus, where we want their cash flows to support their dividends. Historically, Altria has grown their dividends 55 years in a row, including their time as Philip Morris. Last year, they grew their dividends by 4.26%. When we add their dividends to their share buybacks, today Altria has nearly a 10% shareholder yield. That's one of the highest of any established company in the market. These returns can be fantastic for shareholders if they're sustainable. That's why it's fantastic to see that in all 5 of the last years, Altria has grown their free cash flows per share. These easily cover their dividends and dividend growth. That's the case throughout this time, and it's also the case today. It's exactly what we wanted, and it's a massive check on our bonus for Altria. Next, wonderful companies earn high returns, they can grow, and they don't need a lot of debt. Altria is no different. Even with their failed Juul acquisition, Altria has maintained a reasonable level of debt in each of the last 5 years. This sat at $22.5 billion at the end of 2023, and today it's closer to $21 billion. Meanwhile, in the last 5 years, Altria has brought in $41 billion of free cash flow. This easily and very comfortably supports their debt loads. Now, Altria uses their cash flows for basically 2 things. They paid down some debt, and they're returning most of it to shareholders. Over the long run, with a durable business, that can create a lot of value. It's another check on metric number 5, and Altria is still perfect. Before we find out how much Altria is worth, we need to cover our safety bonus. The father of value investing and Warren Buffett's teacher Ben Graham wanted to see a current ratio greater than 1.5 times. This is a key measure of short-term liquidity for how a company can pay its bills in a hurry. In all 5 of these years, Altria's current assets divided by their current liabilities has been below 1. This comes as the company is levered and it's focused on shareholder returns. Most of their cash flows are spoken for, and they're going back into shareholders' pockets as dividends. Still, it means the company relies on positive cash flows to meet their current bills. There are reasons why this may not be as much of a concern for Altria, especially given its operating history and the company's business model. Today, though, it's less than ideal, and this is an X on our bonus. It's something to keep in mind for the company. Now, how much is Altria worth? The big metric of them all, metric number 6, is also our first valuation. We want Altria's average free cash flows divided by their enterprise value to give us a yield that's greater than 5%. This gives a slight risk premium to the 10-year treasury, and it matches the historical yield from the S&P 500. Enterprise value is what we get when we add their market cap and their net debt together, so it helps us look at Altria more like it's a private company. Today, this comes in at $100 billion. In an average year over this time, Altria brings in $8.2 billion of cash flow, which conveniently gives us an 8.2% average yield. In the last 3 years, this is 8.5%, and then in their last 12 months, they have a 9% current free cash flow yield. Those all are better than the 5% benchmark we wanted, and this is a massive check on metric number 6. It means Altria has done it, they're a perfect select 6 stock. But don't just run out and go buy the business. We still need to look at our next 2 valuations before we can put everything together for Altria at the end of the video. Next, we'll use a DCF model to credit Altria for its growth. Here, we'll start with their free cash flows and use historical assumptions to grow them into the future. Let's assume these grow at 3.3% in each of the next 10 years. Then in the following decade, we'll assume these grow at 2% annually. If we want a market-beating 15% rate of return, which is what Warren Buffett wants from his investments, then today it looks like a fair value for Altria based on this DCF valuation comes in at $39 per share. That's down $7 from their current stock price. Still, our third valuation, which uses Altria's historical multiples and their future estimates, today comes in at $46 per share, right around their current stock price. Now, Warren Buffett likes the numbers, but it's the qualities of a company that are his true love. Why don't we learn what these qualities are for Altria through a long and a short thesis? We'll start with the long thesis first. Number 1, the US market, while mature in volume terms, is a highly affordable one relative to other developed markets. This leaves headroom for price increases for many years. Number 2, Altria's dominant market share in US cigarettes and oral tobacco has created a distribution system that few competitors can match for launching next-generation products. Number 3, the business generates massive free cash flow margins that allow for significant return of capital to shareholders. This has also insulated them from the damage of their M&A mishaps. But it's not all positives. Let's look at a short thesis as well. Number 1, as a US pure play, Altria lacks exposure to some of the emerging markets in which total tobacco consumption is still increasing. This leaves it subject to a domestic secular decline in volumes that's projected at 5% annually. Number 2, the FDA appears to have taken a more aggressive approach to cigarette regulation in recent years. It's examining a ban on the use of menthol and a lowering of nicotine in cigarettes. Number 3, with cigarette volume in secular decline, multiple nicotine alternatives are emerging. This limits the scale and profitability potential from each emerging category. Now let's put everything together for Altria. In our fundamental review, we learned Altria is a perfect Select 6 stock. The company earns high returns and they have a ton of cash flow that easily supports their debt loads. They're also actively returning most of this to shareholders through their dividends as a dividend king. Altria's cash flows look attractive compared to where they trade in the market, but there are 2 key points to keep in mind. 1, the company has grown, but their growth has been very slow. It's unlikely they'll deliver very high returns in the future like they have in the past. Altria also didn't pass the mark on our safety bonus. Their current ratio is only 0.5 times. That's less than 1 and is down from the 1.5 we wanted. Again, that's just something to keep in mind. When we factor everything in, Altria's fair value looks like it comes in around $47 per share. That's just slightly up from their current stock price, meaning Altria looks fairly valued. To find undervalued stocks, sign up for our investing tools and get exclusive bonus coverage of 100 stocks and counting.